Business news from the Capital Region. This is Washington Business Report with ABC 7 national correspondent Rebecca Cooper.
Thanks for joining us for a look at business and finance in the Washington region, where a new jobs report shows the economy is continuing its slow growth, even though the unemployment rate ticked up 0.1%. We'll talk about what that means for the banking and real estate sectors during our roundtable segment. Plus, we've got some news from someone used to covering the news rather than being the news. But not today. Stay tuned for an announcement from Alex Orfinger, publisher of the Washington Business Journal. But first, what's in your wallet? And are you getting any advice on how to grow it? One of the things we learned during recent economic downturns is the risk we run with our investment portfolios. Good financial advice can limit that sort of damage and achieve other goals. We have a group of executives today with experience in the financial services sector. David Speck is Managing Director of Investments with the Speck Quadrant Investment Group of Wells Fargo Advisors. He's an authority on mutual fund investing. And David Markley is a financial advisor with Northwestern Mutual. Muriel Garr is the Vice President of Regional Community Development Manager of SunTrust Bank. She also hosts a financial program on SiriusXM that's tailored to the financial needs of women. Welcome to you all. Muriel, today you're wearing your SunTrust hat, so we're going to hold our questions for you till the end because we want to talk about community development and philanthropy. All of you all are here in part as a result of the role that you play, especially in the Alexandria region, for philanthropy and community development. But first, I would be remiss if I didn't take advantage of having both of you here to talk about financial investment strategy. David, let me start with you. You saw the jobs report numbers on Friday. You've seen the stock market grow and then get a little nervous about where the Fed's going. What's your take on the economy? What's your advice to investors?
I was thinking of an old saying in politics that when things are going well, they're never as good as they seem, and when things aren't going well, they're never as bad as they seem. So when the market was doing well, there was a tendency to think it's never going to stop, and when it pulls back a little bit, suddenly there's a fear that there's going to be a great crash. Neither of those are really true, and I think probably the best advice we can ever give is find equilibrium. The market will grow over time. It's lessons that keep getting relearned, and that's probably the best thing that any investor can do, is not get influenced by the daily breaking news. There's always something to worry about in the news, but in general there's probably more good news than bad.
And people pay you for your advice in terms of where there are better opportunities now than there may have been in the past, or more danger signs. So right now, given this time in the market, what are some places that you may have invested in the past that you're steering away from, or some places where you're seeing opportunity?
Well, I think opportunity probably is driven by time rather than timing. I think there's a tendency sometimes to think that successful investing is about getting lucky, picking the right day or picking the right sector. If you sort of look at the market overall over longer periods of time, the best advice probably is not to invest hoping you got lucky, but pick broad investment strategies that are well managed and diversified, and be patient. It's the lesson learned from 08. You know, the good news and bad news about 08. Bad news, worst market in 90 years. Good news, worst market in 90 years, and if you didn't do something precipitous, you recovered from it.
So let me ask you, you have a fascinating background. You spent years in the FBI,
yes.
And now are one of the noted financial planners in our region. So tell me, as a former agent, are there things you see that others don't? Are there ways that you can look at the market and tell your clients, here's something that you should avoid that others may not be seeing?
Well, first of all, let me say I was not an agent, but I was a professional support employee at the FBI. But I think what that background and being in that atmosphere helped me with is really understanding clients and what their goals are and what they're trying to plan for in the future. And so in times when our economy is in question, is just helping people to really focus on what's important to them so that we can take a long-term strategic approach to the planning.
But I want you two to get specific with us. I know I'm asking you to give away for free what you do for a living, but 30% of people say, only 30% say they feel like they're adequately prepared for retirement. So let's assume all 30% of those are watching our show, because that's one of the ways they get prepared. But for those who are watching our show that are nearing retirement and they aren't ready, are there some say, riskier strategies that you think are safer to pursue now that weren't so safe during the recession? Anything you see out there that's an opportunity?
Well, I don't know this is exactly what you're looking for, but I think looking for the latest get-rich-quick scheme is the biggest mistake that people can make. So perhaps not looking for something that they can do, but to make sure that there are things that they don't do that some people get lured into occasionally.
So what's your advice for people who are nearing retirement and aren't ready?
Is you've got to really think about, what are you going to do? Are you going to live on less? Are you going to work longer? Save more? I mean, there's only a limited number of things that they can do, and it comes down to really what's important, how they're going to do it, and they've got to take action.
David, let's look at some specific strategies. The Wall Street Journal on Friday saying corporate bond investing, for example, may not be the sweet spot that it once was over the last couple of years. I'm trying to really hone in there and have you all give me some specifics in terms of where there are opportunities right now in this market. Do you see any?
Well, when someone talks about retirement, there's a tendency sometimes to think that that's a moment in time that results in changing strategies. And that may not be the case. When someone retires, particularly with increasing longevity, there's another lifetime ahead of you when you retire, so you don't typically think about cashing everything in. In fact, in many instances, when someone is investing for retirement, they don't necessarily change their investments. When they do retire, they simply move from the accumulation stage to the distribution stage.
Okay, I'm going to turn to Muriel and talk about philanthropy, and then I'm going to come back to you. I'm going to ask each of you to name 2 areas, 2 sectors, 2 types of products you see as opportunities right now, and 2 that you would steer away from. It can be industry, it can be products, whatever you think. But we did bring you all here also to talk about the importance of corporate philanthropy. Muriel, I every year get to participate in a great event that all of you all were a part of, Spring for Alexandria. What is it about the Alexandria community that somehow really seems to foster a specific mentality of businesses there really wanting to be involved in corporate philanthropy?
It's a sense of community. It's the history that comes with the Alexandria neighborhoods, and the fact that everyone understands that they play a role in their community thriving and prospering. And for the businesses, if the community is strong, then the business sector is going to also be strong. And that's key in any type of volunteer effort, how that partnership looks.
So talk about SunTrust philosophy. All 3 of you all are here representing because you're so involved in the community. How do you get the support of your corporate parent to make sure that that's how they're using their money wisely?
Well, our overall mission is to help our communities prosper and to make sure that our communities prosper, engaging our teammates in activities that are in line with how people feel about what's going on in their lives, their financial well-being, understanding that life happens. It happens in the roles of our teammates. And so because life happens, if you understand that and you partner people with things that they're passionate about, then their ability to do better at the job, it's an all ripple effect. And then also, in addition to that, the community sees the company and the corporation being involved. And so when the community sees that you're involved and you're invested in their well-being, they view you totally different. And so it's a hand-in-glove type of scenario, and it's easy to get the corporation involved. It's even easier to get our teammates involved and get them excited about what's happening.
Well, so kudos to you all, because you all are representative of that kind of thinking in your community, and that's one of the reasons that you're here today. And I would just once again encourage everyone to take a look at some of the different programs that are being fostered in Alexandria as well as other parts of the Washington area. But now back to the test. David, for you, I'm not going to let you leave here today until you give some specific investing advice. Where are 2 opportunities that you see right now for investing, and where are 2 areas that you would shy away from?
Well, the discipline of investing sometimes is to buy the things doing the worst. So when you look at certain sectors that have been affected by the market recently, those would typically be opportunities if your investment time frame is reasonably long term.
So give me some examples
of that. You would certainly look at global emerging markets as being opportunities.
So you're not afraid of Europe right now?
Not at all. But not for a 1-month investment strategy. These are really about long term. And you know, the great secret of being a successful investor is not getting lucky. It's picking good investments, good value, good management, and leaving them alone.
Okay, so that's a good example of opportunity. We've got to wrap soon. So what would you shy away from right now? Where do you see some danger on the horizon?
Well, I think you do have to be careful about fixed income bonds right now with the expectation of interest rates rising. It's not a reason to avoid them, but I think it's a reason to be aware clear that bonds aren't necessarily going to be immune from volatility, so it shouldn't be a surprise, but that would be an area that is expected to be under some pressure.
Great, and then we've got to go, but I told you I was going to ask it, so where's an area for opportunity and where's an area for slowing down?
I think an area for opportunity is just something that I see every day is risk management. I think that being an insurance company and seeing that people overlook it, that's an area that people need to review on a regular basis.
Okay.
And I think as far as areas to overlook, government contractors are in question right now, so invest carefully. Exactly.
Okay, see, this is the kind of advice that we brought you here for, and there's more ahead. Our roundtable takes us inside banking and real estate and media sectors. Plus, up next, our number of the week is a surprising snapshot of corporate reaction to hard times. Welcome back. Our number of the week, 42, is the percentage increase in corporate giving between 2007 and 2012, according to a new survey by CECP, an organization that encourages corporate philanthropy. Also on the rise, the percentage of companies offering paid release time for employees to participate in volunteer programs, like Spring for Alexandria. The survey asked how 2013 contributions would change. 40% expected an increase, 42% said no change, and 18% predict a decline. Well, hopefully there'll be no decline in the information you're getting from this program, so stay tuned, because after the break, our roundtable takes on the future of business news in the D.C. region and what's happening in real estate and banking. Stay with us. And we're back with this week's roundtable contributors, all veterans of this program and people whose thoughts we value and are valued by the Washington business community. A big roundtable this week with lots of big news. Alex Orfinger is publisher of the Washington Business Journal. Phil Ridenauer is the president of John Marshall Bank. And Brian Coester is the CEO of Coester Valuation Management Services. Thank you all for being here. Alex, let's get to it. Some news for the Washington Business Journal, a new look, new paper.
We've got some big changes coming out next week. It's the end of a long evolution for us to be giving our readers a little bit more of what they want and where they want it, when they want it, and how they want it.
Okay, well, you know that we have a deep girl and boy crush here on the Washington Business Journal. So we value it just as it is, and we may fear change. So what is it that we're going to be enjoying out of the paper and make sure we're not going to lose anything that we depend on so heavily?
We remain committed to providing intelligence that you can't get anywhere else. Business intelligence to our readers. I think of our reporters a little bit like intelligence drones.
We do as well.
They're flying.
Who also actually happen to be very good on television for
exactly.
reporters. But
drones, I mean in the intelligence way. They're drones sort of flying over our community and gathering information that we can give to our readers when they want it.
Why the change? It's a successful product as it is. In fact, I have sources deep inside American Business Journal at the Charlotte headquarters who tell me that thanks in part to your great leadership, that Washington Business Journal is one of the most profitable, if not the most profitable, of all the properties owned by American Business Journal.
That is true, but our industry is changing dramatically, as you all know. And this is just to stay ahead of it. Our readers have told us time and time again that they count on our weekly edition to give them the intelligence they need, the background, sort of stories that are connecting the dots so that they can sit down with their cup of coffee over the weekend and say, aha, that's how all of these pieces of news make sense to me. But they also want the news throughout the week, every day, when and where they want it. So we want to, again, think of this intelligence drone flying over Greater Washington.
Very good.
And that's what we want to provide.
Bigger and better, but we won't lose anything that we count on. You're not going to lose anything you count on now. Well, Bill, another thing that, watch this segue, that we've been counting on is the safety of community banks during this recession. Many people have flocked to them. John Marshall Bank has really spread its wings further than almost anyone. I saw, thanks to my friends at the Washington Business Journal, that this past year were the 5th most profitable bank in Washington, and your growth in net income, I think, had the highest number of any of the top 10. 61% growth in net income. How do you keep growing when people may be once again attracted to those riskier big banks that may sell some of the financial products that you all shied away from and became a safe haven during the storm?
Well, I think it goes back to our people that we have at the bank. We've been able to attract some really talented lending and deposit gathering bankers that have 20, 30 years experience in the marketplace.
And you all personalized it in a way that some of the bigger banks can't. But let's talk about some of those financial products that you all have shied away from. There's a lot of news organizations this week reporting that some of them are becoming attractive again as the market starts to grow. What are you going to shy away from as a bank, and what are you going to embrace?
Well, what we try and do is focus on those products and services where we think we have a market niche. For example, if something is a commodity, such as a home equity line or a car loan or a mortgage loan, you really need to have a certain volume to be competitive in that market. We don't think, we have the volume to do that. So what we focus on is small business lending, small business cash management, anything that has to do with a relationship where the business owner can come to us, sit down and partner with us in their growth plans.
And that's never going to be out of style, no matter where the economy is. Well, Brian, let's turn to you about where the economy is. Federal Reserve came out with their beige book. Family assets are growing. We are seeing some healthy signs of this economy, but as you well know, that's making the market the good news is making the market freak out.
Yeah.
Worried that the Fed may stop their quantitative easing, stop some of their bond buying. Do you think we're in for shaky roller coaster time right now, or do you think this is all going to be slow and steady growth?
Well, I think that the purchase market will still do well. I mean, there's still a lot of built-up demand for the purchases, and that'll continue easily 2013, 2014. When it comes to residential, and you guys deal in commercial space a lot more, so on the residential side, the rates going up would make a big difference, just a slight difference. I mean, half a percentage point, you would see rates, refinances drop, 80, 90%.
Take someone like me who sat out the recession. I moved from a house to an apartment. I rent. I'm now in the mood to buy. Do I jump in now when inventory is still scarce in the Washington real estate market and not miss out on low interest rates, or am I okay to sit it out a little bit longer?
Great time to buy. I would go for it. And the reason is interest rates are still low. Inventory is going to be low for the next year or two. They haven't been building enough. So if you look at the amount of real estate needed to just keep up with population growth, it's like 1.2, 1.3 million units a year. They've been building 500,000. They'll probably build 700,000 this year. There's a shortage of homes, specifically in the D.C. metropolitan area.
Tell me about it.
Yeah.
Get out there, put your home on the market. There's a lot of us ready to buy.
Yeah.
Okay, we're going to take a quick break and come back with more advice from you all given today's economy. We're going to be back with Washington Business Report after the break. And we're back with Bill Ridenour of John Marshall Bank, Brian Coester, and Alex Orfinger. Thank you all. Brian, we were getting advice from you, as we like to do, and we were talking about real estate. Tell us a little bit more about how you're looking at this market right now.
Well, the market in the D.C. area is actually really good. I mean, if you look at the first-time home buyer market, over 70% of purchases have multiple offers, with 50% coming within the first 2 weeks. So that's a pretty hot market. I mean, you're talking anything in that $200,000 to $400,000 range is going to move really quickly. And I think you had some statistics on that.
Yeah, we reported this morning that listing prices in the Washington area are up 9% so far. So that's a pretty substantial increase for just the listing prices. And when you're adding on that, prices are going up, sales are going for even higher than the listing prices. It's pretty impressive.
Talk about investors freaking out. You guys are freaking me out a little bit because I'm not yet ready to buy, and I'm worried if I don't do it now, I'm going to miss that opportunity. Well, what else do you have? This is the last edition. This is going to be a collector's item before we get the new look. So what's in the Friday edition this week that people should be looking out for?
Well, in this week's edition, I think we've got one of our great special sections on a level of corporate philanthropy in the region. You'll notice that Capital One is the top giver in the community to local nonprofit organizations, and Deloitte does the most volunteering of any corporation in the region with a lot of hours.
So our hats off to two of them, and a profile of a woman who's been getting a lot of attention because some people say she took a step down to come to Washington, but we say she was smart to team up with who she did.
Yeah, you've got to read about Patty Stone-Cipher, who's the new CEO of Martha's Table. Just to hear her talking about her her kitchen table chats with Bill and Melinda Gates in her former life as the head of the Gates Foundation. She's terrific.
Is she at Martha's Table, or is she at Capital Area Food Bank?
No, she's at Martha's Table.
Okay, so my apologies, because we've talked about Capital Area Food Bank here as well, so all good philanthropies. And Bill, let's talk about philanthropic endeavors. This is something that's been a recurring theme in this show. You've taken on your own mission that I thought was interesting, because when you recruited people to get involved, you didn't even ask them to make a donation. The bank Bank, John Marshall Bank did it for them. You guys are known for your community lending, but yours had a personal note. Talk about why you're involved in Wounded Warriors and what's coming up.
Well, you know, part of being a community bank is being active in the community. We do a lot of different things. Personally, my oldest son Thomas was served in Iraq in 2008, and he was wounded by a roadside bomb there.
We should say he is okay now.
He is fine.
And thank him for his service.
As a matter of fact, he and his wife are getting ready to have a little baby girl here pretty soon.
Congratulations.
So, but because of that, I realized, you know, the impact that has on the men and women that serve and their families. And so we've started a motorcycle ride to raise money for the Wounded Warrior Project, and our second annual ride is next Saturday.
And you're a rider.
I am.
Well, kudos to all of you for your help with us today and for the roles that each of you play in your community. It's been a good week to talk about corporate philanthropy. We hope it inspires everyone, including all of you, and we hope that you continue to join us. Before we go, we want to remind you, you've got options on how to connect with Washington Business Report. We're WashBiz on Twitter, Washington Business Report on Facebook, and you can find a streaming version of the whole show at WJLA.com. I'm Rebecca Cooper. Thanks for joining us.